A massive $6,000 double stimulus package has just been approved, and the IRS has confirmed that Monday deposits are rolling out immediately. Before I dive into all the juicy details about how you can secure this money, take a quick second to hit that subscribe button and notification bell. You won't want to miss any updates about stimulus payments, loan forgiveness, and other financial opportunities that could put thousands in your pocket. You might be wondering, is this really happening? Haven't we heard rumors about stimulus payments before? Well, this time it's different, and I'm going to break down exactly why this double stimulus package is the real deal and how it's going to affect millions of Americans just like you. Let's start with a bombshell announcement that sent shockwaves through Washington yesterday. After months of intense negotiations and heated debates, both chambers of Congress have finally reached a historic agreement on this unprecedented double stimulus package. $3,000 payment is designed as direct assistance for individuals and families hit hard by recent economic challenges, while the second $3,000 comes as part of an innovative economic recovery initiative aimed at stimulating local economies and putting money directly into people's pockets. Now, you may be asking, who qualifies for these payments? The good news is that the eligibility requirements are far more inclusive than previous stimulus programs. If you're a single filer who earned less than $75,000 on your last tax return or a joint filer with income under $150,000, you're likely eligible for the full amount. Additionally, the phase-out threshold has been increased, meaning even if you earn more than these amounts, you might still qualify for a partial payment. What's truly groundbreaking about this stimulus package is how quickly the funds will be distributed. The IRS has completely overhauled its distribution system, learning from previous rollouts to ensure a smoother and faster process. They've confirmed that the first wave of direct deposits will begin hitting bank accounts this coming Monday. Yes, you heard that right, this Monday. Now, you might be thinking, this sounds great, but what do I need to do to make sure I get my payment? The process is surprisingly simple, though there are a few critical steps to take. First, make sure your banking information is up to date with the IRS. If you've received previous stimulus payments or tax refunds via direct deposit, you're already ahead of the game. However, if your banking information has changed, update it immediately through the IRS portal. For those wondering about paper checks, yes, they will still be issued. But here's an insider tip. Direct deposit recipients will receive their money weeks, possibly even months, before paper checks start going out. That's why having your direct deposit information on file with the IRS as soon as possible is absolutely crucial. I've been getting plenty of questions from viewers, and one of the most common is, will this affect my taxes next year? The answer is a resounding no. Just like previous stimulus payments, this double stimulus package is technically a tax credit advance, but it won't be counted as taxable income, nor will it reduce your tax refund for the upcoming year. Another frequently asked question involves dependents. Unlike previous stimulus packages, this one includes enhanced benefits for those with dependents, regardless of age. This means that if you have children, elderly parents, or adult dependents that you claim on your taxes, you could be eligible for additional payments on top of the base $6,000. But there's also something fascinating about this package. It includes a special provision for small business owners and self-employed individuals. If you fall into either category, you might be eligible for extra support through a separate fund designed to help stabilize and grow small businesses. This is part of the government's broader strategy, not just to provide immediate relief, but also to foster long-term economic recovery. Let's get back to those Monday deposits. The IRS has implemented a new real-time tracking system that will allow you to monitor your payment status, a system significantly upgraded from previous experiences. The Get My Payment tool will now let you log in and see exactly when your payment is scheduled to hit your account, and if there are any issues that need addressing, you'll be immediately alerted. Speaking of potential issues, what happens if you don't receive your payment when expected? Don't panic. The IRS has set up a dedicated hotline specifically for these stimulus payments and has increased their staffing to handle inquiries. From what we're seeing, the new distribution system is much more efficient than previous rollouts, so problems should be minimal. Importantly, this stimulus package includes a special retroactive provision. If you've experienced significant income loss over the past year, you might be eligible for additional support beyond the base $6,000. This is particularly relevant for those who may have lost their jobs or seen their businesses impacted by the current economic conditions. Now, let's address another crucial question. What's the best way to use this stimulus money? While every situation is unique, financial experts recommend creating a strategic plan that splits the funds into categories such as immediate needs like bills and groceries, debt reduction, especially high-interest debt, and an emergency fund for future expenses. The timing of this stimulus package is significant. With the holiday season approaching and inflation concerns still on many people's minds, this injection of funds could provide much-needed relief for millions of families. It's not just about helping people make ends meet. It's about empowering Americans with the confidence to participate in the economy without fear of falling behind on essential expenses. Another interesting aspect that hasn't received much attention is the special provision for senior citizens receiving Social Security benefits. If you fall into this category, you'll be pleased to know that this stimulus payment won't affect your benefits in any way. In fact, some seniors might be eligible for additional support through supplementary programs that are part of this package. For those who haven't filed taxes recently, often a concern for retirees and those on fixed incomes, the IRS has created a simplified process for non-filers to claim their stimulus payments. You won't need to file a full tax return. Instead, a streamlined form can be completed online or via mail, making it easier for everyone to access these funds. One of the most encouraging aspects of this stimulus package is it's designed to create a ripple effect throughout the economy. When millions of Americans receive these payments, it doesn't just help individual families. It also boosts local businesses, creates job opportunities, and stimulates economic growth from the ground up. This is why many economists are calling this one of the most well-designed stimulus programs to date. There has also been some confusion regarding the relationship between this stimulus package and other government benefits. If you're receiving unemployment benefits, SNAP benefits, or other forms of assistance, rest assured that this $6,000 will not affect your eligibility for these programs, as it won't be counted as income when determining federal or state assistance. Taxes are a fundamental part of any functioning government, providing the revenue needed to fund public services, infrastructure, and social programs. They come in many forms, including income tax, sales tax, property tax, and corporate tax. Each type serves a specific purpose in supporting the economy and society. Income tax is perhaps the most familiar form of taxation. It's levied on individuals and businesses based on their earnings. In many countries, income tax is progressive, meaning higher earners pay a larger percentage of their income. This system aims to promote fairness and reduce income inequality. Sales tax, on the other hand, is charged at the point of purchase for goods and services. It's a consumption-based tax that applies equally to everyone, regardless of income. While straightforward, it can disproportionately affect lower-income individuals who spend a larger share of their earnings on necessities. Property taxes are assessed on real estate and are often used to fund local services like schools, police departments, and road maintenance. These taxes are based on the value of the property and vary widely depending on location. If you enjoyed this information and want to stay updated, be sure to subscribe to our channel. Don't forget to watch our other videos for more insights and tips. Sharing this content with friends and family helps us reach more people, so spread the word. Thank you for your support.